Hello, it's Brian Shannon from AlphaTrends.net. Today is Wednesday, the 6th of August, 2008, and we had some follow through here on the upside with the markets today. The S&P 500 finished with a gain of about a 0.5% or 66 cents. You can see that it's rising up towards that declining 50-day moving average, as well as this trend line that's been intact since about mid-May to early June. So the market, as impressive as it is right now, you've got to be aware that the primary trend still does remain lower with that declining 50-day moving average. We still want to be very careful on the long side, but of course it doesn't pay to fight any of these trends in here. When the market starts running like this, the question becomes, is this going to be a runaway move, or is it going to be something that fails? And to try to predict is really a difficult thing to do. So what I prefer to do instead is to participate in the short-term trend and be aware of where my stop should be. In other words, manage risk. It can really mess with your head when you're looking at these different time frames and saying, well, we've got this weekly time frame that's severely damaged. The daily time frame, we do have this little pattern of higher lows, and now maybe this higher high in here, but we've got this declining 50-day moving average. We've got a lot of pressure out there. We've still got a lot of bad news coming from the banks, Freddie Mac, Fannie Mae, etc. But they hold up fairly well in spite of that. So it continues to be mixed messages, which is why I believe you have to look at this market as a stock picker's trading market. Here's what I think is the chart of the day. This is the Mind Ray August 40 calls. These are calls that I had purchased in here at $1.30 today. Let me show you what happened. This is something I purchased 10 of these calls right here at $1.30. I sold 5 of them at $2.40 and 2 more of them at $3.80. Now I've got 3 of them still at an average price of $1.30. And if you were paying attention to my blog earlier today, this is where I first pointed it out to readers that it could be this at 10:24 a.m. the stock was $40.20 something cents. That's this one right here. You can see that the stock hadn't taken off yet. There was a big short position, and then I got involved and I put this together, which is just to show the big short position. And basically you can look right here, January 31st, 700,000 shares were short, and then between that date and February 15th, the shorts added about 3.7 million, 3.8 million shares to bring the position up to $4.5 million. At the time, the stock was trading right in here at an average of 35 bucks a share. So for the entire period where the short position rose from 500,000 shares up to 7 million shares, the average price during there was $34.69, meaning that the short sellers were in a vulnerable position. And that's what I was saying, is there's the potential for a short squeeze to develop in here based on that. Here's what the stock did. The stock absolutely took off, and you can see that from 40 and change, which is where I had purchased stock as well as the options, it had a real good day. Now this is one of those stocks that I had mentioned in the video for people who purchased my book about almost exactly a week ago. I mentioned this one as one to keep an eye on. I also mentioned CMED, which had a good day today as well. So there's still a lot of potential for plays in the Chinese, based on hype in the Olympics. Another one that I had shown that could potentially get going is this one, PWRD, and I've outlined the case on the blog, alphatrends.net. But PWRD, if it can get above this $28 a share, I think there's a compelling reason to buy this stock, but you've got to do your own research on these things, and remember that risk management is job number one. Back to the market itself. The S&P 500, like I said, it's coming up to this declining 50-day moving average. The level that we've been looking at really on the intraday time frame is 129, and I just moved that trend line because you can see here the market closes at 128.94. Wasn't able to push up through that level. It still may, but you have to remember again that defense wins the game, and that's what you have to stay focused on. right now it's encouraging that we've got these higher lows. This trend line's been holding, but you can't be complacent with these moves just because the headlines of the percentage moves and that sort of thing are big. You have to be willing to move quickly, and we saw that yesterday because it looked like the market was, on the precipice here on I guess that was Monday, but yesterday it took off. Today we saw that follow through, and the buyers, initially were a little bit reluctant because of the news in the banks. The bank stocks were actually, in my opinion, held up pretty well, only down 1%, in spite of, I guess, I don't pay too much attention to them, but I guess it was Freddie Mac, that FRE, that had the big. I didn't even see what the news was because I don't really care, but this one dropped, and you would have expected, based on a headline, that it would have, hurt the financials worse than it did. But the market holds above this 50-day moving average. Still a very risky group. There's a lot of headline risk still in there. I think that you're better off looking at opportunities in other sectors and other areas of the market, so I'm not going to belabor that one for too long. The USO, the oil fund, continued lower again today, down 14 cents. And yesterday I said perhaps it's going to head down towards this 200-day moving average. What I'd like to do is actually look at the weekly time frame. Early on, when we have all these moving averages, a 10, 20, 30, and 40-week moving average, a lot of times we find support at that first 10-week or 50-day moving average. Then it's the 20-week or 100-day moving average. Then a lot of times we find support that there's buyers near that 30-week or the 150-day moving average. Then we get a bounce, and then it hits the 200-day or 40-week moving average, and then it continues to undergo distribution and further decline. So perhaps we're getting towards that low end in oil. There's nothing on the chart to suggest it right now. This little pattern of lower highs and lower lows will be interrupted basically above 75.10 or so. So it continues in that downtrend, but above 75.10, maybe we're going to see a little bit of a turnaround in oil, a short squeeze rally, whatever. The NASDAQ 100 definitively made it above that $46 level, so it's found some support with these rising lows in here, but we are right up to that declining 50-day moving average. A lot of times that does act as resistance. Maybe it'll hold near here for a day or two, but the direction of the 50-day moving average is more important to look at than where it is in relation to the close. We had lighter volume in here today as well, so for now you want to look at it as it broke past that resistance. Shorts are getting squeezed right now. If the market pulls back and then fails to hold above this 46.10 level, then this will likely turn out to be just a bull trap, basically, and I would expect it to unwind and come back into this range of 44 to 46, and from there maybe we get further downside. But right now, nothing suggests that it can't hold on to these gains, but it's going to be basically, here's the line in the sand for the short term, is 46 to $46.10. Finally, the IWM was up 36 cents today, still short of that 72.5 level that we've been looking at. So you can't really get too confident about the buying in here. The market's traveled a good distance, and you have to be aware that, again, the declining 50 and 200-day moving averages don't typically support continued upside from here, but it doesn't mean that you should fight this trend. Right now, 72 looks like a decent level that ought to act as support if it can continue higher. And if you're looking to really learn how to do this for yourself, you ought to pick up a copy of my book, Technical Analysis Using Multiple Time Frames. It's only available at technicalanalysisbook.com.